Welcome back, looters. I am your host on Tick to Loot, the channel where we turn ticks into treasure. Today we are on Lesson 9.6 of Unit 9, Technical Indicators. In this lesson, we are going to cover the Stochastic Oscillator, a powerful tool used in trading to measure market momentum. By the end of this video, you will understand how to use the Stochastic Oscillator to make informed trading decisions. Let's get into it. So, what is the Stochastic Oscillator? Simply put, it measures where the current closing price is relative to the high/low range over a set period. Think of it like a gauge that shows you where the current price is in relation to the recent price action. This helps you understand if a market is overbought or oversold, which would be a great indicator of potential reversals. The Stochastic Oscillator is measured on a scale from 0 to 100. This is similar to the RSI, but calculated differently. The scale is divided into three main zones: the oversold zone below 20, the neutral zone between 20 and 80, and the overbought zone above 80. When the oscillator is above 80, it's considered overbought, and when it's below 20, it's considered oversold. The Stochastic Oscillator has two lines: the %K line, also known as the fast line, and the %D line, also known as the slow signal line. The %K line is more sensitive and reacts faster to price changes, while the %D line is slower and provides a signal line. These two lines work together to provide buy and sell signals. A bullish signal is generated when the %K line crosses above the %D line while in the oversold zone, below 20. This indicates that the market is due for a potential reversal to the upside. It's like a green light saying buy now. However, it's essential to remember that no indicator is perfect, and you should always combine it with other forms of analysis. On the other hand, a bearish signal is generated when the %K line crosses below the %D line while in the overbought zone, above 80. This indicates that the market is due for a potential reversal to the downside. It's like a red light saying sell now. Again, it's crucial to combine this signal with other forms of analysis to confirm the trade. Now, let's compare the Stochastic Oscillator with the RSI. While both indicators measure momentum, the Stochastic Oscillator is more sensitive and gives more signals. However, this also means it can produce more false signals. The RSI, on the other hand, is less sensitive but provides more accurate signals. It's like having two different tools in your toolbox, each with its own strengths and weaknesses. So, when is the best time to use the Stochastic Oscillator? The answer is in ranging markets where the price is moving sideways. In these markets, the Stochastic Oscillator can help you identify overbought and oversold zones, which would be great indicators of potential reversals. However, in strong trending markets, the Stochastic Oscillator can be less reliable, as the price can remain overbought or oversold for extended periods. One of the most powerful ways to use the Stochastic Oscillator is to combine it with the RSI. When both indicators agree on overbought or oversold conditions, it could be a strong signal of a potential reversal. It's like having two confirmations of the same trade, which can increase your confidence in the trade. However, it's essential to remember that no indicator is perfect, and you should always use multiple forms of analysis to confirm your trades. In summary, the Stochastic Oscillator is a powerful tool used in trading to measure market momentum. It measures where the current closing price is relative to the high/low range over a set period, and it's measured on a scale from 0 to 100. The oscillator has two lines, the %K line and the %D line, which work together to provide buy and sell signals. It's best used in ranging markets, and it can be combined with the RSI to provide a stronger signal. Remember, no indicator is perfect, and you should always use multiple forms of analysis to confirm your trades. That is everything for Lesson 9.6, Stochastic Oscillator. If this helped you, smash that like button and subscribe to Tick to Loot so you never miss a lesson. Drop a comment below. What was the most useful thing you learned today? See you in the next lesson, looters. Keep turning those ticks into treasure.